Hi everyone, welcome back to Be Rich. And me and Keshav were having a discussion the other day, which was the reason why I put up a LinkedIn post today about this issue. It's something he worries about and he wonders about, and that led to the post in LinkedIn. And I thought that would be a great topic to talk about in the video because a lot of you don't go to LinkedIn or use LinkedIn. So I thought this could be an opportunity for you also to kind of catch up on what we spoke and then reflect, and maybe it'll be of use to you. So what was it, Keshav? What were we talking about?
So today my doubt is, as even my parents are getting older as much as I am. So I want to have a monthly income to make my parents to live their life, generate a monthly income if they get retired. So what are the things I want to do to pursue that?
Okay. So we took a hypothetical case here, so you guys can mix and match as you require. We assumed in case of father, from his whatever vocation he's doing, he retires, he'll have from his funds here and there whatever he saved, corpus of around 50 lakhs. And case of being independent would not require anything further from his parents, and they can utilize these 50 lakhs. And the reason we want to talk about was we always talk about investing in stocks and shares, but each person's in a different stage in their life and may not require the amount of diversification, or may not require the kind of money to be generated because their runways have become so short. Once you reach the age of 65, 70, the amount of time you have is quite limited, and you would like to be trouble free and worry free and not worry about what you're going to be generating 20 years, 30 years from now, because more than likely you will not be around to see it. So that being said, so we started with a number around 50 lakhs. So planning a comfortable post-retirement life is a responsibility that many of us bear, and especially when it comes to our parents. With the increasingly longer life expectancy and inflation, it is vital that we make sure that we set it up for them, that there's a steady stream of income coming for them. The reason is some of our parents come from a previous generation, or nor do they have exposure or knowledge to ways and means of investing. They've been working very hard in their job, and they've been saving and keeping it in bank with little investment, and they've been wondering what to do with it, and they would love it. As responsible children like Kesav is, they step in and give some ideas. So these are some of the ideas I floated to Kesav, and I thought I'll talk about it. And if you have 50 lakhs for disposable and you're looking to set it up, maybe this plan works for you. First thing which you have to understand is risk appetite. What is risk appetite, Kesav?
Sir, I don't know.
What is appetite?
Appetite means
Hunger.
Okay, sir.
What is risk?
Risk means something that
Something going bad.
in Adani stocks like that.
Yeah, something going bad.
Back. Yes, sir.
Yeah. So risk appetite means what is your stomach for bad news? You write an exam.
Okay,
correct?
sir. Yeah, sir.
How much are you able to wait after writing the exam for the result? Are you able to be calm?
No, sir. I'll be like nail biting.
Yeah. So that means you don't like the risk.
Yeah,
The
sir.
risk of not knowing is the risk. Not knowing what is going to happen is risk.
Okay, sir.
So if you get very nervous very fast, that means your appetite for risk is low.
Low. Okay.
If you're able to be cool after writing the exam and saying, "Chalo, doesn't matter. Whatever comes, comes. I'm not worried. I've did my best. I'm not worried about it." That means your risk appetite is
High. Okay.
So firstly, consider the risk level of your parents. What are they comfortable with? You might be comfortable with high risk or low risk, whatever. Your parents might be in a different stage in life, so their risk might be different.
Okay.
So since they have retired and they're leaning towards a conservative investment, options are the best thing to do for them. And that will be ideal instead of taking something risky. But to ensure that they get the targeted amount of returns, the most optimum returns, you can mix some high and low investments together to create a balance.
Okay.
Create a balanced return to ensure the amount which they have invested, that 50 lakhs, does not become, due to inflation, depreciate.
Okay.
That means next year the 50 lakhs has become 49.
40 lakh.
Yeah, like that keeps on reducing thanks to inflation, though you're getting 8% or whatever. So the first one which you can look at is, which everyone does, which I'm sure all parents know about, is bank deposits. Yes, I know from where we stand at your age and my age, and people who are younger to us, we will not advise you to put in bank deposits.
Yeah, sir.
But if you're 70, 75, right, bank deposits are very safe. They offer monthly interest payments, or they offer yearly, depends on which one you take. You can take monthly payments or yearly payments. And some banks even provide up to 8.5 for senior citizens. 500-day investment plans they have. The reason why they keep 500 days is because banks are also worried about interest rates, the RBI interest rates going up and down.
Okay.
So if the interest rates of the RBI corrects and goes down, they don't want to be end up paying higher interest rate. So when they say 500 days, they average the cost the bank. That's why if you notice, it'll say 500 days. The best interest rates in banks will offer will be 500 days.
500
If you go for more than 500 days,
Hmm.
interest rate will drop. If you
Okay.
take less than 500 days, interest rate will drop.
Top.
Most banks, the optimum interest rate will be 500,
500
days.
days. Okay.
And the reason is because of the tendency of leaning on the RBI bank interest.
Okay, sir.
Okay.
Hmm.
So that can give you an approximate income for 50 lakhs around 33,000 to 37,000 rupees
Okay.
with tax gone this than
Hmm.
that.
Some
Which
amount
yeah,
will be remaining.
so, yeah, the principal is there, 50 lakhs.
Okay.
But of course, inflation does bite you
Hmm.
because inflation will always be outpacing this.
Hmm.
But the flip of it is, considering their age and their situation, they don't need to worry about it too much. That 50 lakhs, by the time it becomes zero
Hmm.
in terms of inflation,
Hmm.
they won't be around.
Correct, sir.
So don't have to worry about that too much.
Hmm.
So this is what you should always keep in mind
Hmm.
when you're planning for someone, like
Hmm.
your parents, how to invest for them. You should keep that in mind.
Okay.
All of it, all the aspects you
Hmm.
should keep in mind.
Yeah, I have to see. Okay.
Yeah. The other thing which you can invest is government saving schemes.
Okay.
The post office monthly income scheme,
Hmm.
or the POMIS,
Hmm.
and senior citizen savings scheme, the SCSS. These are both excellent options depending on their age.
Okay.
It can give a return of about 7.5 to 7.4%.
Hmm.
Okay, that's around 30,000 rupees,
Hmm.
which you'll get in your hand. And the SCSS
Okay.
gives a slightly higher interest rate of around 8.2%, and that will yield you about around another 35,000 rupees monthly. Right? So these are two very stable, safe options.
Okay, sir.
Then now we can step into something a little more complicated.
Hmm.
Let's say your parents are a little younger.
Hmm.
They have adequate funds. This 50 lakhs is only one portion of it.
Okay.
Right? So then you can expose them to a little bit of risk and volatility. Then you can look at something known as mixed debt and equity mutual funds. These mutual funds, what they do is they offer balanced return.
Okay.
Right? They give you a return, they promise a return, MIP of from around 9%.
Hmm.
So that's approximately around 38,000 rupees a month.
Okay, sir.
Correct?
Hmm.
So this way you're giving them a bit of exposure to stocks through mutual funds,
Okay.
and you get a little higher return. But of course, risk is involved.
Hmm.
There's no guarantees in mutual funds. There's no capital can be destroyed if the market corrects.
Hmm.
The 50 lakhs can become drastically lower. But when the market corrects, it can also inflate and go higher.
Okay, sir.
The other option is our favorite, which is bonds and golds, diversifying in corporate bonds and golds. If you consider that allocating a portion of that 50 lakhs into corporate bonds
Okay.
and golds, your favorite sovereign gold bonds. Okay, what we did a video about.
Not
2%.
my favorite, sir. Dominic's favorite.
Yes, Dominic, I'm sure, will be railing about the Chola Empire, wherever Dominic is. I hope he's doing well. We've been missing him in the comments, Dominic. Some people are even calling me Trump supporter, man, nowadays.
Oh.
Can you believe that? I'm a Republican. Sitting here in India, okay, I've not gone to US, but they're calling me a Trump supporter. I found that very funny. I'm sure just because me saying that troll is going to be immediately active. I don't know if it's a troll or a bot. He's going to come out and say that I'm a JJ Trump, I'm a Trump fan. Yeah, I find that very funny. And that guy's going to jail. Anyway, corporate bonds from reputed companies like HDFC, Bajaj Finance can provide a return of 78%.
Okay.
Plus, if you put some gold into it, that gives you 2.5% interest, which we spoke about in that video. And potential for appreciation of gold price in volatile times can give you a good return.
Okay,
So that way, some bonds are there, some gold is there. So that's also another way of mixing and matching. So some exposure and some gold, which is very secure.
Okay.
So you mix and match according to their risk for appetite.
Okay.
Then a portion which you can always do if you're much younger, let's say your father is retired as a bank officer or something at the age of 60, like some of our friends' parents have retired, you can invest such that you take the monthly interest which you're getting and reinvesting it in another fund.
Okay, sir.
In the stock market mutual index fund. This way you counter inflation. So that way your parents are much younger. They're at 60. They'll be expected to live with medicine and everything, technology nowadays, easily till the age of 80, 85. That's another 25 years. So this way, by taking some of this interest which you're getting and reinvesting it in an index fund,
Okay.
over a period of 20 years and all that, it gives you some more security and you'll be beating inflation.
Okay.
You may not see all what you want, but only some of that money only you can invest because you need some money for yourself. So you can take some money and keep it for your monthly expense and take some and reinvest.
Okay, sir.
So these are basically the ways you can look at helping your folks out. We're talking about 50 lakhs. Then you can do the same thing, multiply it and look at 1 crore, depending on whatever your parents have.
Okay.
Right?
Understood, sir.
And if some of your parents, you are able to contribute to their corpus fund so that you don't have to worry about it in the future. Some of you, let's say, have saved some money in the stock market. Like a lot of our fellow members in our group have managed to invest some 20, 30 lakhs. They're not married as yet, right? They don't have children as yet.
Yes, sir.
No, they can look at giving the 20, 30 lakhs as an addition to their parents' corpus and secure their future now before getting married and having children. So when you get married and you have children, you don't have to worry about it because you've already taken care of your parents.
True.
You know, so when you get married and your wife has dual income and everything, you can look at your life very free, very liberally because your parents' financial needs are all taken care of. So setting up this kind of monthly income for retired parents is just not about immediate returns, but ensuring long-term financial security for them. And diversifying it is also a good option, depending on their age and risk appetite. So does this help?
Yeah, sir, true. I can follow these steps to make my parents to have a good life after their retirement, sir. It will help us.
And this will also help you because if your parents are taken care of, that's one big load off your back.
Yeah, sir.
It's like having children you don't have to worry about. Having genius Einstein as a son, you don't have to worry about making him do homework. He does all his homework. You know, he is going to college in 12th age, 12 itself, he's in college and he's earning millions of dollars because now he's working for Elon Musk. Right? You don't have to worry as a parent, you don't worry about your child. Same way, reverse is also true. As a child, you don't have to worry about your parents. Yes, their money, their health, everything is taken care of.
Understood, sir.
Anyway,
I must follow these rules.
I hope Keshav does. At least it's given him some food for thought, which is what I want for you guys also to have. As you're planning and securing your own futures, do consider planning and securing your parents' future also, because they'll fundamentally require some assistance from us, because not all of them are as knowledgeable as you guys are, nor do they consume internet and social media like you guys do. So they're not aware of many of the things which you are aware of, which you take pretty much for granted. So do have these long conversations and tiring conversations with your father and your mother. And I'm sure they'll be very thankful once they have understood what you're trying to do. Thank you for joining us today on Be Rich. I hope you found this video informative and entertaining as always. Do subscribe to this channel and turn on the bell notification icon if it is something you think is worthwhile following. Thank you.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.